Welcome back to the Crypto World channel, everyone. My name is Josh, and right now, Bitcoin is playing out a new bearish signal in the short term after the fake news that we just saw with the Bitcoin ETFs causing a huge scandal candle in the short term. And on top of that, Ethereum is on the cusp of a major breakout, while Solana is still trending in the bearish direction in the short term. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, we need to talk about the fake Bitcoin ETF news, which came from the SEC themselves, because on the official SEC government account over on Twitter, or X, they basically posted that they have approved the spot Bitcoin ETFs. And then, as you can imagine, as soon as that tweet went out, the Bitcoin price immediately spiked to the upside, because obviously if the ETFs get approved, that is very bullish for Bitcoin. But then after the tweet from their official Twitter account, obviously a lot of people went to check on the SEC website, and nothing was really there about the spot Bitcoin ETFs getting approved on their official website. And then very soon after that, the SEC deleted that tweet on their Twitter account, which meant they had access to the account. If they had to delete that tweet, they could only delete the tweet if they can access the account. And then, of course, they quickly followed up with this tweet right here, which is on their Twitter right now, saying the SEC X account was compromised and an unauthorized post was posted. The SEC has not approved the listing and the trading of spot Bitcoin exchange traded products, at least as of right now. Because obviously, even though this is massive fake news right now, of course, they can still approve the Bitcoin ETFs later on, possibly today or tomorrow or some other time. And this was also backed up by Gary Gensler, who's the chair of the SEC, basically saying that SEC's Twitter account was indeed compromised. So they posted out that fake news on the official Twitter account. And then, as you can see here, Gary Gensler followed up by saying the SEC has not approved the listing and trading of spot Bitcoin exchange traded products, once again, at least as of right now. And I did share this over on my Twitter, basically saying that this is quite the comedy, because obviously, as you can see here from the official tweet from the @safety handle over on Twitter, basically investigating if the SEC's account on Twitter was actually compromised. And it turns out that they were compromised. But as you can see here, at the time of being compromised, the account had no two-factor authentication enabled. And so that's quite reassuring, knowing the biggest financial regulator in the world, the government agency literally designed to protect investors, failed to protect their own Twitter account with simple two-factor authentication. And as the SEC said themselves just a few months back, careful what you read on the internet. The best source of information about the SEC is the SEC, which is now actually false, because once again, we can indeed get fake news directly from the SEC's official account. And so just a quick recap of what happened here. Once again, the SEC originally posted that they did approve all of the spot Bitcoin ETFs, and then quickly deleted that tweet and saying that their account was compromised. And based on these few tweets from the official SEC's account, that moved the market substantially. We saw a quick move to the upside in Bitcoin, followed by a quick dump in the short term due to these tweets. But anyway, if we're taking a look at the Bitcoin to US dollar chart on the weekly time frame, obviously this didn't really have any impact on the much larger time frames like the weekly chart, because obviously, as you can see, the price of Bitcoin is still within this much larger bullish trend within the bull market here on the weekly Bitcoin chart. And obviously, just over the last one day, with that small pump and dump in the short term, the price got pretty much a perfect rejection from that resistance at around $48,000, which I talked about in my last video, because this area of resistance is sitting in between around 48,000 to 50,000. So basically, we would need to see a confirmed breakout above 50,000 in order to set up the next price targets and levels of resistance further to the upside. And if you want to know more about that on this chart right here, then check out my last video here on the channel. So getting straight into the daily time frame, and as you can see, the price of Bitcoin is forming a new bearish divergence, because like I said in recent videos here on the channel, if we see a breakout in the price, that can invalidate a previous bearish divergence. But if the price is still forming higher highs while the RSI is still forming lower highs, obviously we can still form a new bearish divergence. And so at least as of right now, that's basically what is happening. And so far, this is technically confirmed with one daily candle close in the red, but ideally we need to see two daily candle closes in the red. So if this daily candle close confirms in the red, then that will be a little bit extra confirmation confirming this bearish divergence. And as always, a bearish divergence usually plays out in the form of either choppy sideways price action or potentially a slight pullback in the price of Bitcoin, just in the somewhat shorter term. But a bearish divergence by itself does not guarantee that we're going to see a massive crash or a huge bearish trend reversal from a bullish trend into a new bearish trend. Once again, it does not guarantee that that's going to happen. In fact, once again, as I just said, it's most likely going to play out in the form of either choppy sideways price action or possibly a slight pullback in the price of Bitcoin in the shorter term relative to the daily time frame. And so basically, it's telling us that we're due to see a bit of a pause from the bullish bullish trend, but here on the daily time frame, the trend is still currently bullish as the DXY is still technically trending in the bearish direction despite the current short-term bounce. Because at least as of right now, we have not yet confirmed any new higher highs or higher lows here in the DXY on the daily time frame, which technically means we're still forming lower highs and lower lows, which is a bearish trend. And for as long as the DXY is trending in the bearish direction, once again, this means that it's very likely that Bitcoin and crypto is going to remain within a bullish trend on the same time frame here on the daily time frame. And so I would only start to flip more bearish again on Bitcoin in terms of the trend on the daily time frame if we see a strong bullish reversal here in the DXY, breaking into new higher highs and higher lows. But obviously, as of right now, that has not yet happened. And now, if we're taking a look at the 12-hour Bitcoin chart, we can see this ascending line of support is still coming into play at around $43,000. And so if we see a further pullback in the price of Bitcoin, once again, I would expect a significant amount of support around 43K. And if we're taking a look at the 4-hour Bitcoin chart, we can see that right now, as of recording this video, that short-term bearish divergence, which I did also talk about in my last video, is now confirmed and playing out. And once again, a bearish divergence usually plays out in the form of either choppy sideways price action or potentially a pullback in the price of Bitcoin, which obviously right now we are currently seeing that short-term pullback. And so once again, on the larger time frames like the daily chart and especially the weekly chart, we're still very much within a bullish trend, especially on the weekly chart. But here in the shorter term, on the slightly smaller time frames, obviously we're taking a bit of a break from that bullish trend, a bit of a setback due to these short-term bearish signals. And as for short-term support, we do have this area of support which the price perfectly bounced from over the last one day, and that's sitting in between around 44.3K to 44.7K, as I said in my last video. But in a more bearish scenario, if we actually broke back below around 44.3K, then in that case, we should expect support at around 43.5K. And below that, we have more support at around 42.6K. And so those are simply the levels to watch out for potential bounces in the price of Bitcoin. But obviously right now with this bearish divergence playing out, we're due to see a reduced bullish momentum and potentially an increased amount of bearish momentum, at least just in the short term here. But obviously, if the spot Bitcoin ETFs do actually get approved this time for real, then obviously those spot Bitcoin ETFs could result in a pump in the price of Bitcoin if they officially get approved. But if the spot Bitcoin ETFs get denied or delayed, then obviously this could result in more of a short-term dump in the price of Bitcoin. And just a quick trade update with my Bitcoin trade that I entered all the way back down here at around $44,000, which I mentioned on the channel over the last few days when the price was actually back down there. At least as of right now, once again, as I said in my last video, I took profits at around 47,000. So I closed some of that long position at around 47K to take profits off the table. And once again, I did share that all the way back up here in my last video when the price was still back up at around 47,000. And as I also said in my last video, I kept some of that long position remaining to be open, but my stop loss for that long position is slightly in profit. So at least as of right now, my stop loss has not actually been hit as of recording this video. But basically, if the price of Bitcoin starts breaking back below this area of support, back below around 44.3K, then at that point, that will basically trigger my stop loss and close the trade in profits, because once again, my stop loss is above my entry price, and obviously I already have taken some profits off the table at around 47,000. And if you also want to take trades just like this to maximize your profits in crypto, no matter if we're bullish or bearish, then personally, I take these trades over on Bybit. So I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And if you use that link to make a Bybit account, you can get up to a $30,000 deposits bonus, but only if you use that link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex in the description down below and in the pinned comment. And if you use that link and deposit $100 worth of crypto or more and make one trade over on Bitflex, then you can get 10 USDT completely for free. And so if you're trading crypto anyway, or if you're preparing to take the next trade, you might as well get set up or ready to go on one of those exchanges using those links down below this video if you want to claim those extra bonuses. But anyway, taking a quick look at the Bitcoin liquidation heat map, and like I said in my last video, we did have a decent amount of liquidity at around 47.4K and another level of liquidity at around 44.6K. And as you can see, over the last one day, we actually smashed through both of those levels as expected, because like I said in my last video, these levels of liquidity, and as I've been saying recently here on the channel, these levels of liquidity basically attract the price price of Bitcoin towards those levels. And immediately we did indeed hit the level of liquidity to the upside first, which is what I talked about in my last video. And then not long after that, with that huge scandal candle thanks to the SEC, obviously the price dumped back to the downside and perfectly hit that lower level of liquidity at around 44.6k, which I mentioned in my last video. And as for new liquidity right now, we don't currently have a lot of major liquidity zones as of right now, but we do have more liquidity to the downside than to the upsides, which basically means it's likely that sometime soon in the short term, the price could potentially drift a little bit lower. But anyway, getting into the Ethereum part of this video, this is on the weekly ETH to US dollar chart. And right now, the price of ETH is on the cusp of potentially a major breakout, because right now the price is running into the exact 38.2% Fibonacci level of resistance, which is sitting at around 2430 to 2440. And this is based on the linear settings for the Fibonacci retracement tool from all-time high down to bear market bottom. And that Fibonacci level of resistance is the second most important Fibonacci level of resistance, because the only Fibonacci level more important than the 38.2% Fibonacci level is the golden pocket, sitting in between the 61.8% Fibonacci level and the 65% level. And what's very interesting is these Fibonacci levels of resistance are coming into play precisely where we have some important price action back here in around early 2022. Obviously, the 38.2% Fibonacci level of resistance that we're running into right now was previously significant support, and also the golden pocket was significant resistance back in 2022. And so what this actually means is, obviously it's still possible we could end up seeing a short-term rejection from this level right here, because we have not yet confirmed a breakout. And so just to keep that in mind, but once we do eventually see a confirmed breakout above around 2440, and remember this is on the weekly time frame, so we need to see at least a weekly candle close above that level, and in that case the next resistance would be sitting at the 50% retracement level just above 2.9k. But technically that should not be as significant as the 38.2% Fibonacci level of resistance, and above that, once again, we have the golden pocket, the most important Fibonacci level, which starts at around 3.4k and goes up towards around 3.5k. And so basically, if we first confirm a breakout above around 2440 on the weekly time frame with weekly candle close above that level, then it's very likely that we could soon see the price of ETH go up towards around 3.4k, potentially in the coming months. And if we're taking a look at the daily time frame, right now the price of ETH has not yet invalidated this previous bearish divergence. So technically speaking, the bearish divergence is still there and playing out, which once again has been resulting in a lot of choppy sideways price action in the short term, which is one of the most common outcomes from a bearish divergence. But if we see a breakout in the price into new higher highs in the daily candle closes, or if we see a breakout in the RSI into new higher highs, these signals can potentially invalidate this previous bearish divergence. But once again, as I said earlier in the video for Bitcoin, and as I also said in my last video, if we see a breakout in the price into new higher highs while the RSI is still sitting in lower highs, obviously that would invalidate the previous bearish divergence, but could potentially form a new bearish divergence. And so basically in the somewhat shorter term here relative to the daily time frame, we're still basically in a choppy sideways price range, just chopping around sideways. But remember, you can make a lot of easy profits in choppy sideways price action just like this. And if you want to know how to do that, then stick around to the end of this video to find out more. But first, zooming into the shorter term, looking at the 4-hour time frame, and right now we're seeing a perfect rejection from this area of resistance, which is sitting in between around 2380 going all the way up towards around 2410. And obviously this is happening after we saw more of a bullish relief in the short term due to this bullish divergence, which I've been talking about over the last few days. And so this short-term bullish divergence was basically resulting in a small bullish relief that is within the larger choppy sideways price range that is being caused by the larger bearish divergence on the daily time frame. And so once again, at least as of right now, we have not yet broken out of this choppy sideways price range, which means we're still in that price range looking relatively neutral. And so I'll only start to flip much more bullish again if we see a breakout above these highs right here, or obviously I'll start to flip much more bearish again if we see a break below this area of support, which is sitting in between around 2130 going up towards around 2160. And so for now, we're basically just chopping around sideways in between that area of resistance and that area of support. And if we're taking a look at the price of Solana against the US dollar on the 3-day time frame, obviously we're still playing out the rejection from that strong resistance at around $120. And the next significant area of support on the larger time frames is this golden pocket, this previous golden pocket area of resistance, which should now act as new support, sitting in between around $69 to $77. But even if we see a pullback all the way back down towards the golden pocket and bounce from there, obviously we can remain within the much larger bullish trend here on the 3-day time frame. But if we're zooming into a smaller time frame, looking at this price action right here, obviously on the 4-hour chart, we're currently within a short-term bearish trend. Because as I've been saying for a while now on the channel over the last 1 week or so at least, obviously we're forming lower highs in the short term and lower lows, which is a bearish trend just on the 4-hour time frame. And like I said recently on the channel, obviously we did see a short-term bounce within that bearish trend, but ultimately we did not confirm a bullish trend reversal. So I compared this bounce to what we saw back here in my last video. And it looks like right now we're basically pulling back again, similar to what we saw back here. So it's possible we could see another move further to the downside coming within the next few days. And the short-term support levels to watch out for are first of all sitting at around $92. Below that, we have the golden pocket in the short term sitting in between around $83.50 to $85.50. And below that, in more of a bearish scenario in the short term, we have the 78.6% Fibonacci level of support sitting at around $77 approximately. And once again, that level right there is the top side of this golden pocket here on the 3-day time frame, which should act as significant support. And so that's basically the situation right now. Once again, on the much larger time frames, we're still within a bullish trend. It's just right now we're seeing a short-term pullback within the larger bullish trend, which on smaller time frames looks more like a short-term bearish trend. But believe it or not, you can make a lot of money in crypto, no matter if the price is bullish, bearish, or simply chopping around sideways. And if you want to know how to do that, then watch these videos popping up right here on your screen. The video in the top left shows you how you can long or short crypto to make money if the price is bullish or bearish, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed it, and I'll see you all in the next video.